What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Micron stock, ticker symbol MU, on a variety of time frames in anticipation of the next trading day, Friday, March 22nd. All right, guys, Micron stock here today finished the day in regular trading hours up $13.60 a share. That's plus 14.13%. It is up about a quarter or so here after hours. Listen, as always, the after hours volume is going to be low, so take it with a grain of salt. But let's take a look here at this monster hold on Micron today, starting with our daily ritual, our volume profile analysis here on the 5-minute chart. Now, what's the point of this volume profile analysis? Well, I'm trying to pull out some hidden bias that isn't obvious simply by looking at the price action. And it can actually go against what the price action says, so we have to take a look at that and see what that hidden bias potentially says, if anything. And as always, I'm looking for those three things. I need big changes in volume. I need those changes in volume to correlate with obvious moves in stock price, and I need the volume on those moves in stock price to be outside of what is contextual for that specific time of day. So let's start here by circling the moves that I'm primarily interested in. I'm really interested in that drop and consolidation off the open that we saw. Okay, maybe some profit taking there. All right. This pop and drop we saw intraday, that slow, grindy recovery, and then the fade into the close. So, I mean, yes, a lot of today's movement is what I'm interested in. Let's take a quick look. And we will start, as always, from left to right, or as usual, I should say. Now, this volume off the open, we expect a big volume bar off the open, and that to me isn't surprising. I expect that was just likely some profit taking for traders who, for whatever reason, didn't want to do so in pre-market, or perhaps aren't able to trade pre-market, which is still a thing, believe it or not. So, I mean, listen, to me, that first candle can simply be explained by that. So let's move on from there. Now, this little kind of pop and fade that we got at that point, we actually saw just the smallest amount, very small, of bullish bias on the pop compared to the fade. It's definitely not even close to the craziest thing we've seen on a volume profile, not even today. Probably not even on this stock today, but it's worth considering a very small bullish bias. So those two moves to me were not necessarily created equal when you consider the volume on the bullish side compared to the fade side. Okay, but again, it's extremely slight. Now, this upside kind of fade move that we got upside intraday, there's nothing there. We had 5 consecutive green bars at one point, but they're not out of context at all. So we have to remain unbiased. There's really nothing there at all. And then this fade that we got into the close, a couple of legs down that we saw. Again, we had a lot of consecutive, we saw 7 consecutive red bars, which to me would only mean something if those volumes were a little out of context, poking its head out compared to the rest of the volume surrounding it, and it's really not. So there's really nothing there into the close either. So really what I'm getting out of this volume profile here today is just the slightest amount. Again, it's almost not worth mentioning, but very slight amount of bullish bias on that pump, the pump side of that pump and fade. And then obviously that selling pressure that we got off the open, which I think can be pretty easily explained by profit taking, especially when you compare it to yesterday's open. But let's move on here now to those self-fulfilling prophecy psychological levels, man, that I'm paying close attention to here come tomorrow. Guys, on the 30-minute chart, you always hear me say that 50 period, that white line, okay, very common moving average, that's the only reason I use it, on a very common time frame, right? So there's a lot of eyeballs on this. That 50 period on the 30-minute is the quickest moving indicator, moving average, I should say, that we're going to look at here today. We're looking at 3 different time frames. That's the quickest, all right? Now, when I say 3, of course, we really look at like 5, but I'm talking about the 30-minute, 4-hour, and daily when we're actually looking at levels. Now, you'll very often hear me say that when we have a big move to the upside, for example, like we saw here on Micron, I always want to see a psychological barrier from a bullish perspective. I always want to see a psychological barrier get some feet up underneath the move as quickly as possible to kind of shoot down that thesis of like, hey, the stock's trading on thin air, and you end up seeing a lot of contrarian viewpoints come into play based on that alone. But when you start getting really, really heavily watched indicators, which to me is really like the 50 period and the 200 period, getting up underneath the move in like a single day, that's ridiculously fast. And like, you know, believe it or not, this alone, some traders who would like to be bearish on this Micron move potentially, they might decide not to because of that by itself. And that's powerful, right? This is all, it's in the short term, it's all psychology, guys. In the long term, the fundamentals take over 100%. But in the short and even midterm, oftentimes, this is just all psychology. And that's what we're looking at on the charts. It's just a self-fulfilling prophecy. So that's the mentality I'm taking. So listen, bulls, I want to see a continuation of that 50 period getting up higher, getting even closer to the stock price. That's a beautiful thing to see. Any downside test of the 50 period, I don't care what volume it makes the test on, as long as the bounce away from that level higher is on higher volume, above average volume. Bears, you guys would love to see that 50 period start to flatten out, stop gaining ground, but really you're looking for the stock price to break downside on big volume, make a retest on really light volume, and then reject hard on heavy volume. Okay, that's basically making a short-term reclaim of that 50 period, at least on the 30-minute chart, as resistance. All right. Now, the 4-hour chart, this one's not going to be extremely contextual, so I'll make this quick. But when you get a big move, the 50 period is slow on the 4-hour. So again, what I'm typically looking for from a bullish perspective would just be, I'm not asking for it to come up to 110 in a single day, but I'm just looking for that 50 period to gain some ground. I think a big win tomorrow would be that 50 claiming $100 a share. That would be huge, but understand that that's a pretty big move in a single day. So just continuing on the rise, getting closer to $100 a share is a good thing to see. Bears, just a flattening out is ideal for you guys. But let's move on, because this 4-hour is not incredibly contextual. Now the daily chart. All right. Again, it's not going to show after hours movement, but that's okay. Because what we're really looking at here is like the big picture story, but zoomed in from a day-to-day perspective. This chart will have the most eyeballs. Okay, you can see the moving averages are completely irrelevant. The 50 is below 90, and that's the nearest one. But guys, if you caught last night's video, by the way, if you have not done so already, please subscribe to the channel. I greatly appreciate it. My goal is to hit 10,000 by the end of April. I think we can get that done with your guys' help, so I appreciate you jumping aboard. But if you caught last night's Micron video, we were talking a lot how that move was, of course, the earnings move after hours. You have to take it with a grain of salt because it's after hours, and the real test is always the next day. And now today, this was a monster hold. I mean, all things considered, the stock basically consolidated all day, which is a great thing to see. I mean, the next best thing is just a monster continuation. But to me, when you get a big hold or a big move, more so, like, of course, in your favor, a consolidation day is almost just as good as a continuation day, because it's so difficult to hold monster after hours moves like that. And Micron was able to pull that off today. But listen, tomorrow's a new day, and I think tomorrow, looking at the daily chart, tomorrow's going to be the battle of 110. Bears, you're going to want to reject hard off 110, and just, because really, if you're a bear, you probably have your eye on making this below 105, a 2-digit stock. Again, that's probably what you have your eye on, a downside break of 100, right? But bulls, not only did we make a huge move, we also crossed $100 a share. We also crossed 105 and 110. A hold of 110, I think, is a power play. The second day after earnings, it's just, I don't know what else I can say, guys. Tomorrow's the battle of 110. If you're a bull, you want to see 110 hold, create somewhat of a short-term floor around 110, spend as much time of the day as possible above that level. I don't mind if we bounce off 110 17 times, as long as we bounce on higher volume than we test on. Okay, ideally. And that way the bulls can start to potentially look to use 110 to move up toward 115 and so on. Bears, hold down below 110, and you guys can use that as a potential ceiling to reject down to 105, head down to $100 a share eventually, which is a lot of bears' goals. Bulls, just understand that. Now, as we discussed, implied volatility tanked today. We discussed that in last night's video. gave very fair warning. So if your options, if you owned options, like for example, let's say you owned calls and you made a little bit less money than you expected just by looking at the delta, this here is your culprit. All right. And if you owned puts, especially short dated, heading into today, and you lost a little more money than you were perhaps expecting, implied volatility, that's your culprit. It's very, very common. The majority of the time, IV tanks after earnings because this is literally the expected volatility being priced in to the options chain. After an earnings event, that expected volatility goes down. There's no longer the catalyst, right? But also understand that the lower IV goes, the more favorable conditions become for new options buyers to step in and buy some contracts. All right, now, let's take a look at this because we talked about how I wanted to see how the options traders adjusted to that after hours movement because of course we don't have the options data in like last night's video because the earnings happened after the bell rang. So today was our first look at the options bias after the fundamental change from earnings. We got 860,000 total contracts, 611,000 calls, and about 249,000 puts. So even after that big gain, we are seeing heavy overall call side bias. Now, in the short-term speculator category, those short-term bets being placed, the 0 to 20 delta range, it's actually a little bit less so. We're seeing 156,000 calls and about 133,000 puts. So still a call side bias in the short term. But notice that overall ratio is getting pumped up, especially by those deep in the money calls, 135,000 compared to less than 5,000 puts. Listen, if you got value out of this video, please subscribe to the channel. Perhaps leave a like on the way out. I appreciate you, and I'll see you in the next one.